In the ever-evolving real estate landscape, distinct trends are shaping the experience of different age groups of both buyers and sellers. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, August 25th. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. And using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone who is looking for a house that you will love to call home. This week's inventory was 22 homes, which is down from 29 homes last week. The average asking price of those homes was $1,991,000, down from last week's number of $2,143,000. Pending homes doubled this week, more than doubled, to 11 homes, up from 5 pending homes last week. And the average asking price of those homes went up as well, from $2,166,000 up from $1,544,000. And the number of sold homes also increased this week, up to 9 from 8. However, the average sales price dropped a little from $1,760,000 last week to $1,685,000 this week. So now that we've analyzed the market's performance over the past week, let's delve into the broader trends that provide insights into its overall health and potential future direction. Before we proceed, if you find this information valuable, you can subscribe to ensure you don't miss out on future updates. And why not share this with a friend too? Everyone deserves to be in the know about their local market. Okay, let's take a closer look at the market indicators. This past week, has ushered in a significant shift, with inventory experiencing a notable 24% contraction. While this figure doesn't establish a new record for the lowest inventory levels, it does warrant attention, particularly for prospective buyers. It's worth noting that the average valuation of properties in San Ramon typically spans a range of $1.2 to $3.2 million. Presently, we find ourselves with just 22 active residential listings, which translates to a rather limited selection of properties within each price bracket. We tend to notice that buyers shop in about $100,000 price ranges, meaning that there's maybe only 1 or 2 homes per price bracket that buyers are looking at that they're able to afford. As a result, the current market poses challenges for those actively seeking suitable acquisitions within the area. The recent decline in inventory levels has unsurprisingly led to an uptick in the turnover rate. In fact, the current turnover rate indicates that properties are changing hands about 145% faster, more rapidly compared to the pace seen in a typical market. Barring unforeseen shifts, if this turnover rate remains consistent, we're approaching a notable milestone. Next week will mark the 6th consecutive month where the turnover rate has exceeded 100%, with the exception of just the 1 week back in July. Building upon the previous observations, the over-under number, which signifies the percentage by which properties are sold either above or below the listing price, has shown a significant rise to 2.7% above the listed price. Following a trough observed last summer, this metric has exhibited a consistent upward trajectory. In line with this trend, the current month marks the 5th consecutive month where homes have been selling, on average, above their initial listing price. This underscores the prevailing market dynamics favoring sellers and demonstrates the sustained enthusiasm of buyers willing to pay premiums for their desired properties, in spite of higher interest rates. As we shift our attention to the average sales price, it's crucial to consider the context provided by the preceding indicators. This week, the 30-day rolling average sales price experienced a decrease of approximately $120,000. While this figure might seem indicative of a weakening market at first glance, such an interpretation would be misleading. When factoring in turnover rate and over-under numbers, it becomes evident that the housing market remains robust and dynamic. The decline in average sales price is better understood when considering the composition of the current inventory and sales landscape. It's plausible that a significant proportion of lower priced homes are currently dominating both inventory and sales figures. This particular market composition could account for the observed decrease in the average sales price. Therefore, a more nuanced perspective reveals that the market's overall health and vitality are better reflected by the turnover rate and the premiums homes are commanding above their list price. In the realm of financial markets, this past week brought forth a slight uptick and subsequent recovery within the equities market, specifically in the Triple Q fund, which is the tech equities. While the improvement registered was modest, measuring under 2%, it nonetheless carries significance by bolstering buyer confidence in their investment portfolios. However, it is important to acknowledge that our overarching apprehensions from last week are now pivoting towards a different metric, that being interest rates. The trajectory of interest rates and the potential shifts in their direction hold greater long-term implications that warrant careful consideration and attention. In a development that adds to the growing concerns from last week that we talked about, interest rates have once again edged higher, climbing by 14 basis points to reach a remarkable 21-year pinnacle of 7.23%. It's becoming a recurring theme, and this variable casts a lingering shadow of uncertainty over the market's landscape. On a more positive note, those who have adopted a more conservative financial approach are witnessing substantial gains. Cash accounts, money markets, and pensions with investments in CDs and treasury bills are generating substantial income, particularly benefiting savers and older buyers. This augmented income stream is creating significant financial opportunities, particularly for those who belong to the older demographic. Yet the contrast becomes evident when looking at newer, younger buyers. They are encountering formidable obstacles, including towering property prices, elevated interest rates, stringent down payment requirements, and considerable property tax obligations. This highlights the divergent experiences within the current market. It seems that the current market dynamics are catering predominantly to older buyers who are financially prudent, not reliant on borrowing, and can tap into various avenues of income. Consequently, younger buyers are grappling with challenging barriers as they strive to navigate a landscape characterized by high costs and limited financial flexibility. Overall, the market is undeniably favoring sellers, particularly those aged 55 and above. Property values are holding steady, and the demand from buyers continues to spark bidding wars, resulting in swift property sales. This environment is advantageous for those looking to sell. However, for younger sellers seeking to move up the property ladder, challenges are becoming increasingly pronounced. The escalated financial landscape has led to pricier financing options for their intended purchases. This financial strain raises valid concerns about whether incremental improvements in their living situation justifies the mounting costs associated with such upgrades. This conundrum exemplifies the evolving dynamics in the market, where differing generational experiences and financial circumstances yield disparate outcomes for participants. Thank you for joining us for this weekly market update. We hope the summary and commentary helped you understand how our market is impacting your options. If you have specific questions about navigating the market to buy or sell a home, don't hesitate to drop a comment below or reach out to us directly. We're here to guide you every step of the way. And if you found this information helpful, why don't you share it with a friend? And don't forget to hit the subscribe button so you'll always be up to date on the latest real estate news here in San Ramon. Thanks again for joining me. My name's Tony, and I'll see you next week with a new update.